we've got Dr. Pronab Sen, who's Principal Advisor at the Planning Commission, now joining us on the show. Dr. Sen, firstly, thanks very much for joining us on ET Now. And to begin with, you know, we had the IIP numbers out a short while ago. The numbers looking much better than it did earlier. It's coming at 2.4%. So would you say that, you know, we are at a stage where we can maybe say that the manufacturing sector has gone past its worst?
Well, you know, that's a little difficult to say. What we can say is, number one, there is one very good news, which is although the capital goods sector continues to register negative growth, it's dominated by negative growth in only one component, which is electrical machinery. If you look at non-electrical machinery, it's grown by about 14 or 15%. Now, this is very good news, because what it's saying, in effect, is that the investment story which had broken down, that seems to be coming back up again.
Dr. Sen, given that the number is so notoriously volatile each time around, how much do you think the RBI hinges on this number when they take policy decisions?
Well, not a lot, I would think, you know, because basically what they would be doing is that they would be looking at trends, and this would be only one data point in a larger set. But nevertheless, you know, what it does give them is some indication of which way the system is moving. Now, if you look at the data, for instance, the consumer story continues to be intact despite the fact that the growth of consumer non-durables has been weak in May. But earlier it was fairly strong. But consumer durables is very, very strong. So on the whole, I think it is more or less confirming what I think most of us knew, which is the consumer story is holding up. We had been sort of crossing our fingers on the investment story, and what the May figures are saying is perhaps it's not as bad as it was earlier.
Dr. Sen, so how should we walk into July 31st with the presumption that the RBI will engage in monetary easing, or perhaps given the way in the inflation scenario as well as the currency and the volatility that they might just hold back this time?
Well, you know, you've got another just a few days, couple of days left for the WPI to come out. And I think you really need to look at that, because the fact is, with the monsoon reports, I think there's already movement on food prices on the upward side. But we still have to keep our eyes on what's happening to core inflation, and especially to manufacturing. If the manufacturing prices continue to moderate, then I think RBI may feel a little emboldened.
Right now, Dr. Sen, we've had the RBI say in the past that it needs to see meaningful movement on the part of the government in terms of addressing suppressed inflation if it must move ahead in terms of addressing rates. Now, would you say that if the government addressed that, and we did see some amount of subsidy reduction, especially on the diesel price front, come through, the RBI may go ahead with rate cuts despite the fact that we still see inflation remaining a challenge?
You know, the point is that it's not just a question of diesel prices. It's really a question of whether or not the fiscal targets are going to be achieved, and whether the government is making sufficient efforts at doing so. Now, at the moment, the diesel price hike, I think, is not quite as compelling a requirement as it was you know, just a couple of weeks earlier. But nevertheless, you know, I think what the RBI is waiting for is a clear signal from government that the fiscal targets will be adhered to.
And Dr. Sen, just, you know, to go back to the point of the quality of these numbers, do you think one should exercise a bit of caution once reading into the IIP numbers as a gauge for the investment activity, or does this number really confirm that 5.3% GDP growth?
No, I've maintained this earlier, and I say it again, that the 5.3% is probably an understatement. I think when the final figures come in next year sometime, it'll probably be up to closer to 6%. Having said that, you know, I do believe that as an economy, we are hanging around the 6% mark with all the infirmities of the IIP. And I don't think it's going to get any worse.
And how do you believe the impact of the weak currency is likely to eat into the inflation numbers?
Well, the fact of the matter is that the weak currency is a reaction. It's not a cause of anything, right? And a weak currency basically does lead to higher prices of imports in the economy. But since India is a country which doesn't import too many consumer goods, it's not going to find reflection in your main price indices. The real question will be, to what extent will Indian producers be able to pass on the price increases arising out of a weak currency? And what it looks like is that the pricing power has reduced over the last few months, and therefore you may not see such a large impact.
Right now, Dr. Sen, you did mention that, as far as the government goes, whether or not it's going to be able to meet the fiscal deficit is the big challenge. Do you believe that the government is on track to meeting that fiscal deficit number that it spoke of in the budgets, that the finance minister spoke of in the budget?
It's early days yet. Basically the data that comes in will be coming in on a quarterly basis. So we'll probably be finding out sometime in August as to what's been happening to both expenditures and revenues. I think we should discuss it next month.